Hello folks, LA here. This is the weekly report doing on the 22nd for the 22nd. Last week we saw the market move higher. That push up takes this market right up near the highs on the S&P, not that far away now. Dollar was down, TLT was down, a Santa Claus rally in place. And speaking of Santa Claus, next week going to be a very slow week, so I won't be doing intra-week reports, so no daily reports. I'll be back for the weekend report to start off the new year. Intra-week we had a little bit of an volatility. I expect we're going to see a lot more of that once we get to January, but this market has just crawled its way higher and higher, even despite that big setback. Took 4 days away. What does it do? They just come right back in and start buying it again. Now, if you look at it on a weekly, there's actually extension higher on the weekly, and on the monthly, it's just 1.3% away from the all-time highs now on the S&P. If we look at the bullish retest region here on the dollar index, and why is this important? Well, the dollar, as it goes down, tends to drive equities and everything else higher. So when the dollar bounces, you can expect everything to get hit. To some extent. And so as we're coming into this, we're coming in very close now. Pretty soon we're going to hit that bullish retest region. It's going to be the first test, which means more than likely it is going to bounce. That's going to probably put the treasuries doing the opposite. And so we've been expecting the treasuries to try to turn and come back down. Here's the 20-year. You can see it actually got into retest region zone and was rejected. If we look at the 7 to 10 years, slightly different. This is the weekly. You see an over-under on the weekly. And then on the long term, you can see it's doing the bearish retest region and more than likely going to get sit down again also. 92.50 probably be the target. That's about a 4% move to the downside. That should be enough, along with the dollar moving higher, to pressure commodities, to pressure equities, to pressure basically everything. When that happens, right, we're going to get a better sense of just how strong this market is, because that's going to be the first attempt to the downside of significance probably in 2 months. And it's also going to give us a good sense of what is best and what's worst. And I suspect we're going to see a lot of those high flyers, all the crap that's been going up, get hit, whereas some of the other stuff will stabilize. I'll be very curious to see, for example, how precious metals do. I'll be curious to see how the high-flying Magnificent 7 does. I mean, those are the kinds of things we want to look at coming in the new year, because as we know, beginning the new year, here this week, next week, the week after, the vast majority of everything sets up and says, hey, we're starting to get stretched. When we get stretched, we can expect this market to try and turn, and I expect that's what we're going to see as we move into the first 2 weeks of the new year. Fundamental side, everything was better than expected on the PPI, CPI type numbers, the core PCE here in the U.S. Earnings were mixed. Looks to me like earnings are going to continue to be mixed once they start to spill out. Really nothing happening in the coming week. It's a holiday shortened week, and volume is going to be non-existent. Another week up is what we should expect, some sort of a small crawl higher. S&P could still take out those all-time highs, but at this point it's going to be pretty difficult to do. I expect that volatility I was just talking about in January, all the sectors, all the indexes, daily trends probably reset lower during the month, and I would think in first week we could probably start to see some of that pressure start to set in. Okay, interesting tidbits. Single stock ETFs. What are we talking about? I mean, ETFs to me has always meant, a vehicle where you didn't have to decide what was happening, and you could just basically look at the market and play it in a passive way, right, long term. Well, these things are essentially leveraged ETFs on one thing. So if I want to take NVIDIA, for example, I could go to 2-to-1 long or 2-to-1 short NVIDIA. Why would you want something like that? Well, like most things, Wall Street wants most of the money, and if you don't have to pay the broker for margin in order to lever up, you can pay Wall Street to do it, because they'll essentially take your money from you most of the time. And so that's probably why they exist. What are they not? They're not for long-term investors, right? This is not a long-term vehicle. any kind of leverage vehicle is not a long-term vehicle. They reset daily, and if you don't know what you're doing, you're going to get lost and get beat up. The only time you'd probably want to use these things is if you had really high conviction in a particular stock on a very short-term time frame. Otherwise, you probably just want to stay away. But they are popular. They started out over in Europe, and it looks like they're starting to get popular here. So I suspect you're going to see and hear more and more about them. Trading plan. Well, we made a nice big gain this week, up to 21 plus. 100% up now on WGMI. This has been driving this up. This thing was up 26% this week. It's up over 100% since October. That was the end of October when we bought it. So we're talking about 6 weeks, 100%. That's insane. And that's what's driven a lot of our profit. Portfolio, it's about 79% long, 5% short. That's still as it was last week. No closes, no ads. If I look out, what am I going to do? Because you got to look ahead. This is my plan. I'm basically going to bring the stops up close. I'm going to bring the targets down on a couple of the issues. Things that I think are going to get hit when those interest rates start to go up and, the dollar starts to go up as well. So I want to try and target exits on that first week, which is what I've been talking about. I also might want to, and I don't know that I will, but I might want to short a couple things, and I've been looking around trying to figure out what to short. It looks to me like these financials are coming up to the point now where they might be a decent short. Now this is KBE. We're talking about small cap financials, the locals. Here's a breakdown bar top. It's almost there. This is the stronger of the two, KBE. It's coming right up into it. This is a place where this thing should try and turn back. If I look at KRE, it's got a ways to go, but the idea is that as it gets into this, and as the other one gets into the top, right, that's probably a good place to think about a short position, with the market probably wanting to turn down. So to me, this is where we need to be looking if we're going to be looking at any kind of shorts. And we'll just have to see what it looks like. And to wrap this thing up, what do we think next week? Well, you got to think it's going to try and crawl higher again. Best case, probably about that 48.62 area. I think that's going to be a real stretch. More than likely, it's going to be something a lot less than that. Worst case, some sort of a big sell-off could take you back to the swing point high. Have a great one, folks. Merry Christmas to you all. Thanks for being out there. I really appreciate all you long-term subscribers, especially. Hanging around listening to me all these years. We've done a pretty good job. There's always ways to improve, which we're always trying to do, but overall, not a bad run again this year. Have a great one. Stay safe. I'll see you next time.